Hi, everybody. Welcome to this week's edition of the podcast, Money Matters with Hill Financial Group. We just want to welcome our guest today. We call him Adam V in our place. It's Adam
Villarreal.
Thank you. That's why we call him Adam V. V stands for very good tax
And
advice.
I'm out of here.
So there you go. We don't cut anything. We just do this. We brought Adam in. Thank you so much for coming. We're going to try to, with the new big, beautiful bill that's out there right now, and everybody's talking about taxes and what's going to happen with the new tax code. We're not going to get too much into that, but every year when we do our clients, when we meet with them and we go over a lot of their investments, the biggest thing that I tell them is the two things that could really hurt your returns long term are fees and taxes. So you get those lowered on your returns, 9 times out of 10, you'll do very well. This is what made Vanguard because they have such low fees and they really do some tax compression. But just really wanted to thank Adam. He does taxes for a couple of our businesses and a lot of people here in town. He's just been in the community for how long? I'll let you kind of tell your story, how long you and your family been here and all that kind of fun stuff.
Yeah, I appreciate the introduction, and it's just an honor and a pleasure to be here to discuss these intriguing topics here that keep us up late at night.
We're going to make taxes as fun as we can.
Wife and I and kiddo been here going on, I think, 9 years now. Graduated 8th grade yesterday, so I got a high schooler now.
Oh, God, that's, what you get to get him a car in 2 years. That'd be good times. But then you got your DoorDash built in.
Ooh, that's
Son,
true.
I would really like a Brahms ice cream.
And the ride home from this establishment we're in now. So.
I think we're talking about.
So just finished up my, I think, 13th tax season. Not one of them has been the same. Mm-hmm. Yeah, tax law is ever changing. Just when you will never figure it out. I've come to figure that out. Tax law is like hundreds and thousands of pages long, so just enough to be dangerous and to represent the clients that I have here locally. A lot of business owners, you drop up and down Main Street or around Midlothian, chances are, I'm probably somewhere behind the scenes doing some work.
He's going to tell us what all of y'all are doing wrong off the record here in a little bit.
No, but I've enjoyed it here. My wife and I have enjoyed it here. She is, I call her my director of first impressions at the office. I realized that she's a lot better looking and something that people want to see when they walk in versus myself. Recognize my weakness, and I improved it.
There you go.
So stay behind the scenes.
Yeah.
And where is your office?
So,
I know it is, but
still located here in Midlothian. If you're familiar with Fuzzy's, kind of a George Hopper area, so got an office there, established brick and mortar. So for those clients that do like to stop by and want to talk face to face, I used to say stop on by whenever you want.
Not when you have a pretty wife up front.
Come to find out, they'd like to stop by.
A lot. I was getting some tacos, thought I'd stop by.
Kind of got a little too much, so. But no, seriously, I always tell my clients, just give me a shout if you ever need anything. I'm always here for you. And a lot of my clients do have my direct cell, so that's not too common. So I just want to be available.
I want to say that Adam's being modest. I've referred, since we've been here, I've referred some clients over to him that were looking for somebody local, and every single one of them, that's why I want him to be here in a podcast. Every single one of them's like, he's great. He gets back to us. He answers all our questions. And I know that sounds simple, but you get CPAs during tax time that do not return emails, that do not return phone calls, and it looks bad on us because we referred them. So I'm just glad to have a partnership with Adam, and I can't say enough. He has just done a lot for a lot of our clients, and for me personally as well. So.
On that note, and we're going to dive more in this. We're going to repeat this over and over, but the relationship between tax advisor and tax preparer, tax professional, that the stronger that relationship is, the better off the client is.
100%.
Yeah. Our clients are the ones we share are feeling that this past year, and forever will feel that as long as we retain them. And we're gonna dive in more in that on how our communications and our hanging together and constant communications about the client and tax law changes better the client situation year to year.
And I'll let Casey take a question. I always monopolize the mic, as everybody that's seen this podcast knows. But I want Casey to maybe softball a question up to Adam to maybe that has to do with taxes, because that's why he's here. I mean, yes, I didn't have to pay him for this or anything like that. But if I go too long, he might put this on there. Hopefully, it's tax deductible.
Oh, it is. My invoices are always tax
there you go. We'll get a couple of whiskeys behind the bar or something like that. Do that. But no. Feel free to maybe throw a softball question up to Adam, and we can kind of go from there.
Well, yeah, I mean, I definitely have loved working with Adam. He's been great as we, communicate back and forth with, like you said, shared clients. But what are the things that most people either forget or don't realize the ways they can maximize their deductions and credits on their tax return? Mm-hmm. Whether it be a retiree or, someone still in the working years.
Yeah, absolutely. Obviously we're talking in generals here, top level very much. What I like to tell my clients, especially when I always do an initial client meeting consultation on the house, so all the questions that they want. Every tax return is different. Every individual that you see up and down the street, the grocery store, everyone in this room, we're all different. So when you go have those dinners with your friends and family, and obviously taxes come up, it's one of the big things outside of politics, I think.
For sure.
Yes, listen to what someone has to say, but there may be a scenario where the situation doesn't apply to you or doesn't apply to you. And the first thing you should probably not do is pick up the phone and call me and say, why don't I get this deduction? Mm-hmm. Well, okay, now I got to spend the time to tell you why.
Yeah.
Trust me, I would have gotten it for you if it applied.
Sure. Right.
But a lot of
look at me when you're saying that. It's okay.
I think our viewers have picked
Why did
that
I get
up.
that one too? What the heck?
Oh, well,
Like that's for New Mexico bats. You're not going to get that.
Yeah. Let's talk about the decisions you make every day. No. Tax credits and deductions you mentioned. Tax law is ever changing.
Right.
We felt it in 2018. That was one of the biggest tax law changes. We're feeling it right now. Hopefully, it's for the good. From what I've read on some new laws coming out or potentially coming out, attempting to get passed.
That big, beautiful bill.
The big, beautiful bill. It's huge.
Huge.
Hopefully, those tend to be more small business driven. Mm-hmm. The more deductions for the working class, the middle class, and trust me when I say middle class, I'm going off of a definition of the Internal Revenue Service and the U.S. Treasury. You could still make a lot of money and still be called middle class according to them.
Yeah.
Okay?
Yeah.
There's just different levels to that. But hopefully these tax deductions and credits are being geared up towards those individuals better than what we've had in the prior, 8, 12 years, whatever.
Sure.
So one of those being, what I've read is interest deduction on your vehicle, your vehicle loan. And
Really?
when they say that, from what I've read, it's not included inside of itemized deductions. It's actually a straight deduction that everyone can use. Now, when I say itemized deductions, not to get too nerdy here, every year you do make a decision, standard or itemized. Average American is going to use standard deduction. You just don't have the medical expenses, property taxes, and mortgage interest to cover the standard deduction amount. So utilizing that interest deduction, just think about what you pay your car note every year. That's a big one.
Especially now with these interest rates now.
Absolutely. And charitable contributions, if you don't recall, a couple of years ago, we had a $300 per individual, $600 total on your return charitable contribution automatically, because charitable contributions fall under that itemized deductions as well. So some people just didn't have enough again. But I think it's going to fall somewhere between those two. Some of the stuff some of the tax laws that are going to probably continue to go, if you are a business owner, is the 20% qualified business income deduction. Now remember, that's that 20% deduction that you, as a taxpayer, by having qualified business income, profit from a business, you get a 20% deduction on that amount.
Yeah.
Now, you've never seen it on your returns.
Yeah, there you go. Yeah, fortunately.
I said profit.
Yeah.
Okay, but yes, and those individuals who have and the business qualifies.
Sorry, what was profit?
And then and next week on our podcast,
Yeah,
we're going to talk
we'll
about,
talk about
profit.
profit.
So that's going to should retain as well and continue on.
Is that the case? That brings up a good question. Is that the case for somebody that has like a rental property and it's an LLC? And let's say the mortgage is $2,000 a month, but they're bringing in rent of $3,000. They're making a profit of $1,000 a month, $12,000 a year.
Very good question. Very good
Can they
question.
use it in something like that? I have a lot of clients with rental property.
Yes, yeah, and hopefully you do. One of my talking points when clients come in, especially business owners that come in, and their trade isn't every day being a real estate professional, and they're selling widgets or whatever, and that's their ordinary income there.
Being a part owner in a restaurant. Yeah, I get it. Yeah, sure. Yeah. Go ahead.
Thanks for the office here. One of the things I do say is, hey, and I guarantee y'all have the same conversation of let's spread out. Let's find some different ways of revenue streams. Let's find some different ways of obtaining wealth. Ultimately, at the end of the day, my conversation with clients ends in how are we gearing towards obtaining wealth. Short term, yeah, it's just managing our tax returns every year. Long term, hey, let's see, should we invest in real estate? Should we invest with professionals like y'all? Should we stick the money in our mattress? So we have all these conversations to see how do we obtain wealth. And one of them being that I harp on a lot is real estate. Every wealthy client that I've ever had, and I do have, has real estate in their portfolio in some way or manner. Why? Well, the tax law is written in a manner that real estate tax laws are more attractive and beneficiary to a taxpayer than someone going to work and making a W-2.
Rich Dad, Poor Dad. The book. Yeah.
So, and just a real nerd thing here. Tax law is written, misconception maybe, tax law is written by Congress.
Right.
Okay? The president does not write tax law. He might, through politics
Does he know
or through politics, under handshakes, he may give some ideas on what he wants, and the people wanted. Well, that's why he was voted in. But the chambers of Congress write tax law. Those are filled with politicians, lawyers, and CPAs. Tax law is written by the rich for the rich. Okay, one of those being is real estate. I guarantee you go to all their portfolios on Capitol Hill, and they all have real estate because the tax law is written in that favor of that. Why? Capital gains rate. So it just keeps going down and down.
And we talked about that at one of our other podcasts is for 1031 exchanges, for example. I mean, there's an old saying, 1031 till you die, because when you die, then you get the stepped up cost
Yep,
basis.
you get it step up basis. Now, and again, this is in the tax year that we're talking about. Again, every year is different. So if it so happened to be this year, yes, that applies. 1031s are very, very beneficial to a property that has appreciated just tremendously. And if you remember, I don't know, real estate here back in 2018-19 to 2022 was
Did
Yeah.
pretty okay.
insane.
Yeah, it
okay.
was very insane.
I mean, it's like we were in a bubble here compared to the rest of the country. When scenarios like that, where you just appreciate so much and you have such a huge gain on that, maybe some individual who was either gifted a property or inherited a property, they don't know what to do with that kind of money,
Right.
And so tax law written to defer those gains, those capital gains on those gains, is very beneficial to the taxpayer. Now I say defer because everyone thinks that you can get out of. There's no one's creating any tax loops anymore. It's 2025. You're not. I hate the cliche. If it's too good to be true, it is. Okay, You're not going to give me $100 for a $1,000 write-off. That stuff. It doesn't work.
Yeah.
Okay. If you get caught, it is white collar prison.
Yeah.
It might be okay, but nobody's creating any tax loops or anything. So the 1031 defers taxes on to the next. You're not ever going to get out of it. There's tax owed somewhere. It's just when you pay it.
Right.
And the rule of thumb is, in our realm of tax professionals, defer tax.
Here's all. Somebody comes into you, what is it? So you have the standard deduction, because I know you have some business clients. We have a lot of clients that are individuals, some business clients too, but especially when they're retired. 90% of them use the standard deduction because it's so high now for a married couple.
Right.
What are some deductions? Let's say they're still working, so we could use that there. Like we're big fans of IRAs, of course, and HSAs. What are deductions that you have told people to do that are using the standard deduction, but they get another deduction on top of that standard deduction? What is something that can maybe help them for next year?
Absolutely. So a lot of, and what you're describing without describing is the average American.
Yeah.
That really is
Right.
the average American. How do we help ourselves out? A lot of that has to do with what you're able to do, has to do with, especially if you're a W-2 employee, of what your company or who your employer is offering, whether that be retirement, other benefits, HSAs,
What
kind of thing.
we can, like an IRA and an HSA, you can do outside of even, because I have a lot of employers that don't do HSAs.
Right. There's some requirements, and what I mean by that is if especially if it's married and joined, there's just requirements you have to make. But in a perfect world, if you were able to do it, your employer didn't offer it. Two of the things I would always recommend and try to push towards right off the bat is an HSA. Mm-hmm. You're going to go to the doctor. You're going to go to Walgreens. You're going to go to CVS. You're going to get prescriptions, unless you're just the best specimen walking around here. Yeah, you're going to do something. So if you're going to go ahead and do that and spend that money to do it, you might as well just put into the HSA all year long, and write that off as a deduction, essentially. Yes, it's inconvenience to go set up an account and get a debit card. Remember to use that debit card. Right. But the HSA helps out if we're talking just the average American individual that doesn't get offered that through their work, and you're able to do that. HSA's there. Retirement. If you're someone who's disciplined and your employer doesn't offer it, and you do have extra cash at the end of the year or throughout the year, and savings is one of your biggest things in life, I always offer, hey, let's go talk to this advisor and see what we can do. Traditional, Roth, maybe they do have a side gig of a working business or something, and hey, now we can go do a SEP in a different manner,
Right.
and now we're doing... All that strives from the conversations that the client and I have, and then the conversations that we all have together.
For sure.
It just kind of going forward, because I mean we've been sitting here going over what deductions to do and trying to think of things that if somebody's watching this, what is something that can benefit them in the time that they're watching this podcast. But okay, let's do this. I'm gonna shift gears a little bit. It's not even on here, so we do the script and I always stay off of it. What has been, for lack of a better word, like we all have these stories, and you can't, I don't want you to, of course, say names or anything. Is there any kind of story or anything where you did a tax return, or where maybe you're doing a business and it was just a moment where you're like, how did I get here? Like, I'm just envisioning, I'm sitting here doing a tax return, and all of a sudden I have IRS agents kicking down the back warehouse, and you're just like, what the heck is, no, I'm just not saying, but what is the most fun, or just a crazy story just from doing a tax return, or somebody trying to write off a goat, or something like that?
Well, I mean, there's scenarios.
Well, you can write off goats.
Yeah.
Right off their, say their grandmother that's 120 is actually a child living with them. I don't know. Not to put you on the spot. He had no idea I was going to ask.
Yeah, this is a question from the viewers, isn't it?
It is,
We're taking calls here.
Yeah.
Well, off the bat, I guess, how did I get into this, realm of being a tax professional and accounting and all that? I was actually fortunate enough to take a class in high school. I wasn't the very best behaved kid in high school.
Okay.
I kind of got thrown just into this class, and I was like, what the heck, I'll take it, sure. Aced it. Took the advanced accounting class, aced it, and actually went to UIL
Yeah.
in high school.
Partier.
Yeah.
One state
There
there.
was some natural
And so I was
aptitude
like,
there.
okay. So it was always there in the back of my mind. Okay, I know I can fall onto that and do that, because that's what I love, and I do love. I love my job. I can't think of any scenarios right off the top of my head. But what's cool about me sometimes is, so I don't take work home. Okay, and yeah, my wife does work with me now. But before this, she wasn't real privy to who my clients were or what they did, or but it's fun just to go out either in town or even in Dallas and big clients there and mention, oh, that's my client. Oh, they do that, or maybe you see a commercial. It's just that's always cool, and especially I got a 14-year-old now. He's, oh, that's your client, really? And the first thing he's thinking of are discounts, something free, something.
Yeah, right.
Send me a
Of
football
course.
bag.
Yeah. He's done that here several times for some bacon ranch fries, so and the
Hey,
root
man,
beer,
you gotta do whatever you do.
free root beer here. But yeah, it's just fun having clients that are doing good out in the community and the well-known names, and you're kind of in the back, taking care of things. So that's fun.
So, Adam, one last question here is just thinking through our self-employed clients and people who are self-employed. What would you say your philosophy is when you're
Oh
working?
yeah, absolutely. The backbone, I'm sorry, of America, the small business owners, not to sell myself at all, because I'm not the only tax professional, but pay for tax advice, pay for a professional. Yes, you might have to go through a few consults of trying to find the right guy, and maybe a few years of trying to figure it out if they're good or not. But pay for someone. You're in the business to make money for whatever you created the business for. Naturally, you're probably not good in accounting, or you're not good at taxes.
Right.
I'm not good at running restaurants, and that's why I don't do it.
Mm-hmm.
Okay, so somehow find a way to pay for that cost of a tax professional and or accounting or bookkeeper. That being said, self-employed individuals, majority of the time when they come in as new clients, are way too patriotic. Meaning
They
they're
give too much to-
They're leaving way too much money on the table. In kind of multiple parts, just not knowing the deductions and everything you're able to get.
I like that way too patriotic.
Yeah.
Oh yeah, more than me.
Your goal is to help keep that money in their pocket.
Absolutely. Well, and that could be one of the goals. Yes.
Sure.
Yeah, and that's what we do when we sit down. Is we talk about goals. We say one of my things is I got to know, first off, are we caught up to date? Is everything good? Everything historical is good. Second, let's get current if we can't, and then tertiary, where are we going? What are you in business for? Are you just doing it every year just to make a living, and so be it? What happens to the business when you die? Whatever happens.
Sure.
Is it a stepping stone to creating another business, to sell, to turn into a franchise? Is it a stepping stone to get into some other venture?
Right.
Real estate, another business? We have those conversations to say, hey, where are you going? Because the answers to those questions matters to what I do in that year. And I think now that I'm saying it out loud, that's the difference between myself and maybe someone down the line, that
Sure.
you got to care about it. Yeah, we can put the numbers on paper. But I started with every return is different. And so how do I customize what I'm doing for this individual client itself? It gets personal.
Yeah.
It's very hard. It's not normal. I call it financially naked. It's hard for someone new to say, "Hey, we just met.
Yeah.
Get financially naked."
Right.
Hopefully, I can get to a client quick enough that they're comfortable with doing that. Again, the ultimate goal being helping out this client in their manner, in their scenario, in their situation as best as possible. And so we try to encompass all that.
Yeah.
And if we can't do it in 1 year, maybe it takes us a couple of years to get it right. But that's kind of what we offer at Villarreal.
Well, and that
Tax
makes sense
Advisors.
because we can't prepare good financial plans if they're not transparent and giving us the full picture of what they all have going on financially. You can't prepare good tax returns if they're not being fully transparent.
I say that all the time. You're paying. You need a good financial advisor. You need a good attorney. You need a good CPA. And with them, you tell them everything, and that is your mafia, for lack of a better word.
Looks like you need a good tailor too.
I like that.
You got a good tailor on
Yeah.
staff, don't you?
Yeah.
You know,
Yeah.
and I know you were on that, but I was thinking of something when you said some people are better patriots. I would say, or more patriotic. I will say, by paying as least amount as possible to the IRS, we're patriotic. You know why? Because you're going to have a great financial advisor. He's going to keep that money that you kept. He's going to invest that money, and for the next 30 years of your life, we're going to make interest on that money that you would have sent to Uncle Sam, and we're going to wind up paying more taxes over 30 years
that.
on that interest that we're going to make you.
They got crystal balls at Mike Hill Financial,
so-
man. I'm
No.
telling you.
We're gonna invest that every year and make you some money that you have to pay taxes on that. So, anyway, sorry.
Dude, don't be.
No,
But
that's
no,
good.
I love the answer. Thank you for asking that question. So, Money Matters with Mike Hill, Casey Harding, Adam V. I always mess up his last name, so I'm gonna just say Adam.
Villarreal Tax Advisors
There
for
you
anybody
go.
who's looking.
Appreciate it.